Hello everyone, welcome to the Financial Information Channel. My name is Marvin. In this video, I am going to explain 7 things to look out during stock earnings. And one of the main reasons why investors care about the stock earnings, because that is usually the time when the stock prices either go up or go down. And stock earnings give investors an opportunity to either add shares, sell shares, or either start a new position. So in this video, I am going to explain 7 things to look out during stock earnings. And real quick, before I start the video, my name is Marvin. I do videos about the stock market, personal finance, and how to make money online. So if you're interested, you can click on the subscribe and the notification bell. And the first thing to watch out is the revenue and the EPS numbers, because that usually presents an opportunity to either buy low and sell high. And we know the term that buy low and sell high is often overused. What I really care about the company earnings is when the company presents good numbers in terms of EPS and revenue, and the stock price still goes down, especially when that guidance is great. So usually what I have been doing throughout the years is I have been adding stocks into my watch list, and depending on the timing, that might give me an opportunity to either add position or get into a new company at that specific time. So remember that it's important to have that mentality to buy a stock price during weakness. Now for the second thing to look at during stock earnings is to get familiar with the stock filings. If you're investing into a company, make sure that you read the 10Q. That form includes the income statement, the balance sheet, the stockholder deficit, and the cash flow. It also has the financial conditions and the results of that specific company. So make sure that you read the 10Q, since that document can be a little bit long but presents really valuable information. And for the number 3, make sure that you read the specific metric that is associated with that company. So for example, if you're investing in Walmart, you need to pay really a close attention to comp sales. And if you're investing in Adobe system that is a technology company, you really need to pay attention to the service revenue numbers. And with another technology company such as Snapchat, you need to take a look at the daily active users. So make sure that you know exactly what you're investing in and pay attention to that specific metric that is associated with that company. And for the number 4 is gonna be the guidance. Now the guidance doesn't have to be specifically attached to numbers. For example, at this moment, we might have a trade war, so it is important to get an idea how that might affect some of the companies associated with China, and pay attention to the guidance during the quarter and compare that guidance to the previous earnings to make sure that the company is following up. The guidance has a huge effect over companies over the long term, so make sure that you pay attention to the guidance, because that can give you an idea if the management is lying to you. Now for the number 5 is going to be to measure the cash flow of the company. Now the cash flow gives you an idea if the company has done a really good job during that specific quarter, and it can tell you a lot of good things when the company has done a really good job managing the money, paying the debt, increasing the dividends, and in addition adding more cash into the balance sheet. And to put it in simple terms, you want to see a cash flow that is very positive, where the company is getting more money than the company is spending. Now for the number 6 is going to be the account receivables. And account receivables is going to give an idea if the company has been able to create the revenue at the same rate that is creating sales. For example, if the service or sales revenue grow to around 5% and the account receivables are only growing to around 10%, then you can get an idea the company is not doing a really good job. And sales revenue growth and account receivables have to grow equally at the same rate. And for the number 7 is that you just have to enjoy the volatility. Things in the stock market doesn't make sense at times, and it doesn't have to make sense all the time. So instead of complaining and saying why the company shares move down after reporting great earnings and great guidance, take that opportunity and evaluate if that's a good time to add more position into that specific company. Investing when the company shares are moving down can be very challenging, but it can be rewarding for those investors that take action during the bad times. And those are gonna be the 7 things to look out during stock earnings. I just wanted to have this video as simple as possible. One suggestion that I'm gonna give you is to make sure that you go back to the last earnings and read one of the 10 Qs for your favorite stock. And I know it is boring, but at the same time it's gonna help you to become a better investor in the long term. And with that said, that is gonna be everything for this video. Please leave in the comment section below which company earnings are you most looking forward to. And for me, it is going to be Facebook. The earnings are going to be a few weeks away. The guidance is going to be really important, so I want to see how the company will guide during the next few quarters. And you can look at this video where I talk about the companies that will open up the stock earnings on Friday. And you can click here to see another video from this channel, and you can click on the subscribe to continue watching videos about the stock market. I'm going to thank you once again for watching the video. Have an excellent day and take care, my friends.